Hey guys, haven't made a video in a while. I was talking to Gert in the chat today about option spreads or options in general, and you can get very detailed and technical with options based on volatility, the Greeks, theta decay, alpha, beta decay, Sharpe ratios, all that stuff. But basically, when it comes to options, let me see here. When it comes to options, they're not that really complicated. They're normally suited for better plays like weekly options or monthly options, but you also can use them on the daily. And let me see if I can give an example here, and then I'll talk about my robots a little bit. So this is the daily chart of the S&P 500. Let me zoom in here for a bit. And this is how I would use options. There's many ways you can have puts and calls and spreads and multiple leg entries and stuff. But basically, let's say price breaks up through here on the daily. It breaks up and everything, and then somewhere around this level, I have my pending order, just like you would in trading, maybe down here. But the difference is, let's see if I can do this. So my order's tagged here, and I don't have a stop loss on it. And then I would have another order. Where's this at? Let's just say down here. And now, when price comes back to this level, I'm in a long, but instead of a naked call option, I'm in a spread call option. I think the technical term is called credit spread, but basically I have my entry here and I have my entry here, and so long as price stays within these lines, whether it comes down the whole way or it comes up or goes above this, in the next couple days I'll make money. The only way I won't make money is if price comes out of this line, and that's pretty much it. I'm insulated against I'm insulated against how far my downward movement can go. But if my movement goes past this line here, then I would expire worthless. I threw stochastics on here because some people, just to say I could do the same thing. Okay, so now I wouldn't trade like this, but just as an example, it's like, okay, stochastic crossed here on the daily. So let's move my line right there. Wherever this cross. Oh boy. Sorry, I haven't used MetaTrader in a while. But okay, so my entry is at this line here, and a normal stop loss would be like 10 ticks or pips, somewhere. But with a credit spread, once again, as long as price stays below this or in here, I'll make money. And that's called a credit spread. And that's how options are nice, because you can trade price action, which is fine. There's nothing wrong with price action. Really, there isn't. But if you're using the options, instead of having a stop loss, you have two options creating what's called a credit spread. And then as long as price bounces between those spread levels, you'll make money. Now, the only downside of this type of trading is that you don't make as much money as you do in contracts, like normal day trading. But the upside is you have a mathematical probability of how the trade will play out beforehand, and you're casting a much larger net over the market. So, I have these bots running here that are based off of tried and true algorithms. And just as an example, I'll bring up this robot. This is what I call slow and steady. This takes usually monthly option type trades. As you can see, it expires August 18th, and from 1.45 to 1.42 I have put options they're being sold. And from here I have call options being sold from 1.13 to 1.12. So that creates a rather large net. So, you know, price is going to bounce around back and forth, or, you know, back and forth on the S&P here. But since I have such a large spread, when these expire, I'll make money from it. So I might have days where I'm upside down, or I'm down a couple thousand, but it's not like I lost that couple thousand. It's that it's floating in the market. It's not closed out. On the last day of the options, you make your most money. So we did the same thing here. Puts and calls, creating a straddle. Instead of like a real narrow spread like on the daily, I might say, as an example, okay, so here's price up on this S&R zone. We're getting towards the top or something here. Yeah, that's as far as the chart goes. So I could sell right here at this price, and I know the S&R point is down here, and I could buy down here. So I have a call and a put, and as long as price stays within this range, I'll make money. And that's also another way you can use options. The hardest thing with options, real options, not binary options, the hardest thing with options is that getting the correct strike price. It's just like trading. You don't always get the fill you want correctly. So you could have slippage and then you won't get filled. So this bot does long, I hate to say the word range trading, but it takes a look at like the daily and weekly, or even the monthly, and it places trades on the opposite ends to capture what's called premium, capture price movement in a range. Unlike binary options, you don't run out of time. So if you think your trade isn't going to work out, you can close it. It's not a big deal. As an example, like this trade here that expires on the 18th, you know, I'm up 1,183, down 1,079. I'm like, man, the market has earnings reports and things coming out. I can close that. I don't have to just let it sit out there and lose money on me. I'm going to go to the Bitmin bot here, and Bitmin is much more aggressive than a passive strategy, but it works in the same type of way. You have calls and puts, and it buys and sells, and as long as you're within that range, you make money. So it's like I made 11,600, but this option lost 7,000, but I still made profit on it. And that's you know, you have premium over here and commission. So you can use options for daily time frame trading, or you can use them for monthlies. I just like the fact that you can have a wide net. And if you're like Alex in our group that looks at all the earnings reports and the easing and everything, you could do the same thing with options. It's like, well, I'm going to risk 1,000 on Monday. I'm going to put 500 on this option, 500 on this option, and this whole week there's no news events that should move this out of the range or move it too much, and you just let it go and let it do its thing, and at the end of the week you make your money. You can close out early or adjust positions. You know, that's the really nice thing with options. Like some people, they'll you know, they'll put some amount of money away to scalp intraday on, you know, traditional charts, but then they'll have 4 or 5 monthly long play options going to hedge their intraday trades, and that's just a strategy you can use. Let me see here. Neutral. Sorry, give me a minute here, guys. Somewhere, that's not right. I don't want to edit the code. Oh, here's what I wanted to show you. See how it says Bitmin 2.0 encountered an unexpected error? Error creating spreads unable to match a series in the option chain for the SPX PM. That's the issue with options. Even on this platform, Alta 5, it's not going to fill every single trade that you want, because it's going to simulate what it's like to trade in a real market. That's what I like about this website. And if you have an idea I mean, you can build it however you want. It uses a very easy language. It gives you templates. But these two, this is, I mean, I could be doing this for much, draw 50K, 100K. You could have 10K and 20K, 5K and 10K, whatever you're comfortable with. But when you're using options, you're basically having a larger net with what you're doing. And at least for me, that seems easier than scalping, but I'm not very good at it. Let me see here. I'm going to include this link in my video. It's how to generate income with options. There's 3 videos. This one's the longest at 40 minutes, but if you watch this one and these two, maybe 30 minutes of your time, and then the last one if you want to. So I'm going to include what the algorithms are based off of so you can see how they work and all of that. And I think that explains it. I mean, we're all price action traders, and it's just casting a larger net over things without stop losses. And I didn't get into the Greeks and volatility and how you calculate your return, but that's also covered in the videos and different things. But, I think it's a very valid strategy to use along with trading. So with that said, I hope that explains it a little bit. And if you have any questions, let me know, and I wish you guys a wonderful week coming ahead. I might get my live account back because my broker is like, hey, he's like, get this account back, and so on and so forth. So, alright, I'm out of here, and wishing all of you a great week. Bye now.